Hare Krishna. Welcome to Tax Guru YouTube channel. This is C. Rohanar Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series on concurrent audit of bank branches. And today is session 16, and we will discuss topic frauds in banks auditor's perspective. Yes, so let's dive into it. Let me allow to share my screen. Yes. So in our previous session, we discussed what forex transactions and NRI accounts wherever applicable in branch audit. In today's session, we move to a critical, important, and highly sensitive area in banking, that is frauds in banks from the auditor's perspective. So banking operates fundamentally on what? Trust basis, internal control discipline, documentation integrity, and regulatory compliance. So any breakdown in these pillars can lead to what? Fraud, financial loss, reputational damage, and regulatory penalties and erosion of the public confidence too. So frauds in banking are no longer limited to what forged checks or cash misappropriation. Today, the frauds may involve digital channels, loan diversion, staff collusion, identity theft, cyber-enabled fraud, forged securities, misuse of the system rights, shell entities, accommodation transactions, and sophisticated borrower manipulation. So these are very important. So for a concurrent auditor, the responsibility is not to investigate every fraud, but what? Certainly to identify the risk indicators, red flags. So internal control weakness, unusual patterns, documentation anomalies, and possible fraud triggers at an early stage. So in this session, we will cover meaning and types of frauds, early warning signals, EWS, red flagged accounts, staff related frauds, RBI reporting requirements, and most importantly, the practical role of the concurrent auditor in a fraud prevention and early detection. So moving further, let's see why fraud risk is critical in banking industry. So banking is uniquely vulnerable to fraud because it what combines money, trust, documentation, technology, delegation, and customer dependency. So why fraud risk is so critical? First, banks deal with what? Public money, correct? Any fraud affects not merely shareholders, but what? But whom? Depositors, lenders, regulators, and the economy. Second, banking operations are transaction heavy. Millions of transactions happen daily basis, on day-to-day basis. Cash, transfers, remittances, digital payments, loans, trade finance, guarantees. So third, lending fraud can be massive in scale. A signal manipulated borrower, a single manipulated borrower account can involve what? Crores of rupees. Fourth, digital transformation has created new fraud vectors or avenues, that is phishing, malware, unauthorized internet banking access, account takeover, fake digital KYC. Then next, insider access is serious risk. Employees may have access to passwords, customer data, transaction approvals, account modifications, documentation records. And then regulatory expectations are stringent. RBI expects what? Banks to detect, classify, monitor, and report and control frauds effectively. So concurrent auditors therefore serve as an important preventive checkpoint here. Correct? So moving further, let's see meaning of bank fraud. What is meant by it? A bank fraud generally refers to what? An intentional act of deception, concealment, manipulation, forgery, misrepresentation, or unauthorized action intended to obtain the wrongful gain or cause what? Wrongful loss. So here important elements are intentional act, dishonest conduct, financial impact or exposure, violation of control procedure. So fraud may involve customers, borrowers, staff, third parties, vendors, intermediaries, cyber actors, or combinations of them involving collusion. So let's see examples: fake loan documents, false signatures, diversion of loan funds, fictitious deposits, unauthorized debit entries, fraudulent remittances, fake guarantees, tampering with security documents. So this distinction between the fraud and operational error is what important. So if an employee mistakenly posts an entry incorrectly, that may be an what error. It is not fraud. But if the employee intentionally manipulates the entries to conceal what shortage or benefit someone, then that becomes the fraud. So very thin line we can see. For the auditor, identifying the intent may not always be straightforward, correct? So, but identifying suspicious circumstances certainly is. What is important as a concurrent auditor is that identifying the intent of the is not always be straightforward. It is not easy to that, but we can identify what suspicious circumstances, and that can be certainly we can. Moving further, let's see major types of bank frauds. So bank frauds can be classified in multiple categories like deposit related frauds, example forged withdrawal instruments, fake signatures, unauthorized transfers, dormant account misuse, account takeover. In case of loan or credit frauds, what fake stock statements, very important, very important. That stock statements are we should be verified very strongly. So inflated receivables, accommodation bills, shell companies, round tripping, diversion of the funds, fake collateral, multiple financing. Then operational frauds include suspense account manipulation, unauthorized reversal entries, cash shortage concealed, fake vouchers. In cyber frauds, there may be phishing, malware attacks, SIM swap fraud, payment gateway fraud, internet banking compromise. Under trade finance frauds, fake LC documents, very common, duplicate bills, forged shipping papers, non-genuine exports or imports. And in case of documentation frauds, forged title deeds, fabricated balance sheets, altered sanction documents. And in case of identity or KYC, mule accounts, synthetic identities, fake customer onboarding, and in case of staff frauds involving insider manipulation or collusion. So, concurrent auditor must understand these frauds are often layered and not isolated. They can be means together it can be done. So let's see EWS, early warning signals. Early warning signals are indicators suggesting possible stress, irregularity, diversion, misconduct, or fraud risk. So we need to be very careful in these situations that EWS early warning signals. We should not be ignored this. So it EWS doesn't automatically means a fraud. That is also one thing need to be taken care of. We need to go beyond that once EWS is there, early warning signal. So, but ignoring warning signs can convert what manageable risks into significant and fraud exposure. So, examples include financial signals, frequent check returns, development of LC or BG, sudden overdrawing, irregular account operations, deterioration in turnover, mismatch between sales and receivables, frequent restructuring request. And in case of operational signals, delayed stock statements, non-submission of financials, insurance expiry, stock audit irregularities, frequent ad hoc request. And in case of behavioral, what the signals are? Borrower evasiveness, resistance to inspection, frequent change of address, change in management without any explanation. So that need to be seen. Transactional signals, unusual related party transfers, funds routed through multiple entries, then round transactions, round tripping, sudden large credits or debits, documentation signals, incomplete documents, forged looking papers, valuation inconsistencies, then state legal reports. So auditors EWS are very much red alert observations requiring what documentations and reporting. So we need to go into the deep once EWS. Moving further, practical indicators of EWS. Okay, let us focus specifically on branch level practical indicators. So as a concurrent auditor, we should watch for unusually high cash transactions, repeated same day reversals, unusual suspense account entries, transactions near audit dates, temporary adjustments to the improve the position, credits immediately followed by outward transfer, dormant account, sudden activation, unusual locker access disputes, employee overriding controls, transactions beyond what approval matrix, multiple customer complaints, high check returns, unauthorized password sharing indicators, frequent maker checker breaches that need to be checked whether the maker checker is in active. So in local loan accounts, stock statements copied month after month, inflated turnover inconsistent with operations, no genuine inspection evidence, stale collateral valuation, and interest servicing through borrowed funds. That is also very important. So these are the classic practical fraud indicators. Moving further, let's see red flagged accounts. A red flagged account refers to what? An account where suspicion of fraudulent activity exists based on what? Identified warning signs, unusual conduct, or adverse findings. So important distinction here and red flag accounts is not automatically a declared fraud. It is a stage requiring what? Focused scrutiny, investigation, evidence gathering, transaction review, and borrower examination. So triggers may include diversion of funds, fabricated stock, shell transactions, forged collateral, false statements, siphoning indicators, accommodation transactions, and end-use violation. So from audit perspective, if you see serious indicators, you may not label fraud independently unless the governance requires what, but you must clearly document observation and escalate that fact. Okay, that need to be taken care of. Next, let's see staff related frauds. So staff frauds deserve special attention because insiders understand the system's controls and weaknesses, right? So they are very much in that. So common staff frauds include what? Cash misappropriation, that is temporary shortage concealed, fake balancing, unauthorized cash withdrawals. So unauthorized account operations involve fake debits, password misuse, dormant account exploitation. Again, loan fraud collusion, sanction irregularities, bypassing the controls, accepting the fake documents, inflated collateral. Then CBS manipulation also involved backdated entries, reversals, unauthorized modifications. And in case of forgery or document tampering, we can say fake signatures, altered vouchers, replaced documentation, and customer collusion, staff helping customers bypassing the controls. Indicators will be excessive override usage, that is very common. Unusual login patterns, transactions after hours, documentation mismatch, complaints against the specific employees. So concurrent auditors must remain what? Objective and evidence based. Let's see reporting of frauds. Okay. So banks are required to follow RBI's fraud risk management and reporting framework. Okay, so key regulatory expectations generally include what? Prompt identification, internal reporting, classification, investigation, reporting to the regulator, governance oversight, and corrective action. So fraud reporting depends on what? Nature, amount, category, involvement, and materiality. So banks fraud monitoring mechanism typically includes branch reporting, regional office review, fraud monitoring group, compliance, regulatory reporting, audit committee, board oversight. So where criminality exists, law enforcement involvement may also rise. So concurrent auditors do not directly report fraud to RBI in the normal course. So unless separately mandated. But they are critical in ensuring what suspicious matters are escalated internally without delay. Means we can escalate to the zonal if there is involvement of the branch manager, or if you are suspicious, or if it is branch manager is not discussing or not try to ignore it, or just giving haphazard reasons or excuses. So that time you have to escalate it to your first is zonal office. Let's see role of concurrent auditor, okay, in fraud prevention. So concurrent auditor's role is what? Preventive, detective, and control focus. So key responsibilities involve review what high risk transactions like cash, transfers, suspense, reversals, exception transactions. Exceptions reports are generally day to day on basis generated in CBS that need to be seen, and also that need to be shown to the branch officials. So taste internal controls, maker check are very important, access controls, authorization hierarchy, documentation completeness. And in case of loan account scrutiny, end use verification is very important. Stock statement review, sanction compliance, drawing power valuation, whether it is evaluated correctly. In deposit vigilance, document accounts, unusual withdrawals, KYC compliance, and in case of CBS analytics, unusual patterns, overrides, repetitive anomalies, and exception reporting, observation must be timely and not after months. So that is very important. What why concurrent auditor is doing on day-to-day basis is that is the important. What if you have seen any irregularities, it immediately report it at first branch official level and then branch manager, and then if it is need to be done to the zonal, reported to the zonal officer. But there should not be a more major 3 to 4 or 5 days of big gap between the irregularities see observed and reporting. So that means at least discussion or everything should be happen in a day or two. So escalation, what significant concern should be escalated through prescribed channel, as I say. So concurrent audit is an early defense mechanism, not a post-mortem exercise. That need to be taken or keep in mind. So what auditor should do? The practical fraud detection checklist. So practical concurrent audit checklist, we may check specimen signatures, KYC completeness, document validity, sanction terms compliance, whether the whatever terms and conditions specified, that is 15 to 20 condition in the sanction letter, first see. That is the very important when you are verifying the loans and advances. We need to see, of course, guidelines are also there, but whatever mentioned in the sanction letters, the terms and conditions, that first 2025 terms and conditions, we need to see whether that are complied or not, or whether the follow procedures, or whether what is the status of that, those sessions. Means you need to see that very clearly. Then insurance continuity, stock statement authenticity, DP calculations, that is drawing power calculations, legal documentation, valuation age, unusual account movement, linked party transfers, reversal entries, suspense aging, manual intervention cases, then dormant account activity, employee override logs, exception reports, unauthorized fee reversals, account opening abnormalities, that is KYC is not fulfilled, and even then account is open, duplicate addresses or mobile numbers. So vigilant auditor often detects issues before they become fraud. Because many times whenever new accounts open, the account is open immediately, even though there are guidelines. Means there are practical cases happen when Aadhaar and PAN is not linked, even though with the physical copy of the hard copy, means with account, physical copy of the Aadhaar or PAN account is open, but then it is stopped. But we officials should not open that account unless everything is there. That KYC need to, why KYC is there? You have to comply that KYC before opening an account. So it is a big irregularities, means Aadhaar and PAN is not linked. It is inoperative or invalid status. And how can you allow to open that account? So that is very important. That is the indicator. Means we need to see, we need to verify and very vigilant in that particular part. So let's also see what are the limitations of auditors. Okay. That is very also important. So it is equally important to understand our limitations as a concurrent auditor. So concurrent auditor is not what branch management. We are not a manager. We are not managing the branch. So it does not replace the internal control owners. We are not involved in controlling mechanism, right? So concurrent audit is not a forensic investigation by default. We are not a forensic investigator. So may not have unrestricted access to all intelligent inputs. That is also a very, very inherent limitations as a performing concurrent audit. We don't have access, is we have what unrestricted access. So whatever we have, we need to perform our duties on based on those accessible rights. So, however, lack of perfect access doesn't reduce our duty of the professional skepticism. Also, that is also important. So, if records are missing, explanations inconsistent, or pattern suspicion, observation must be documented, and professional skepticism is central. That need to be taken care of. So, let's see illustrative fraud scenarios. Let's understand first illustration. Borrower submits identical stock treatment for month-on-month basis. So inspection absent, sales declining, yet drawing power remains what? High. So possible inflated stock fraud. In illustration to dormant account misuse. So dormant savings accounts activated, large debit posted, customer dispute transactions, possible unauthorized access fraud. Then under employees repeatedly overrides transaction control, that is on the staff override, entries reversal next day, potential internal manipulation. And in case of loan diversion or in case of term loan disbursed for machinery, funds transferred to related entity immediately. Is the main what is verifying is the end use of the loan, that is need to be verified properly. So possible diversion is there, means it is taken for one use for particular use and it is used or given to something else. So that will be the possible diversion. So these are the classic concurrent audit alert situations and are very common. So, what we conclude from today's topic is that fraud risk in a banking continues to evolve in complexity, scale, and sophistication. So, technology also has improved convenience, but also increased what fraud avenues. So, documentation may look compliant while transactions tell another story. So, this is where the concurrent auditor adds what real value. The auditor's contribution lies in vigilance, skepticism, timely exception reporting, pattern recognition, control evaluation, practical branch level intervention. So, fraud prevention is not only management's responsibility, it is a collective governance function in which the concurrent audit is also involved and also a vital protective layer. A timely observation can prevent a major financial loss. So, that's it for today. Thank you. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, email, or you can also comment below the video. So if you are not yet subscribed to Tax YouTube channel, then do subscribe for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on a Tax YouTube channel. So stay tuned to the Tax YouTube channel. Thank you. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.